Hello, YouTube. Today, we're going to be talking about how we are finally here going into Friday. We're going to have Payroll Friday coming up, and we want to decide whether or not this is going to be a trap where we spend a few days above the downtrend and then we go right down for a new power slam. Or if this time is different, we're going to fight the Fed and we're going to go higher. So what's really important into tomorrow is just 8:30 a.m. pre-market. Before the market opens up, we're going to have that Payroll Friday coming in. We know Fed officials have been talking about this number a lot. Jobs are really important, and that's really what it comes down to for tomorrow. So since tomorrow is going to be Friday, we want to have a look at our weekly chart because that is going to tell us whether or not we're actually making progress or if we're not. So for this week, we can note that we got support and resistance in the top left, and we've blown through all of the resistance. We made it to 379.46, which we know was a really important quarterly level. We would also note that we're starting to get elevated volume. With tomorrow, I want to see whether or not we can get closer to tracking the weekly volume, or if we're going to stall out roughly here at about 400 million shares traded. So what it really comes down to is where we're going to settle tomorrow. After 365, the next important area for me is going to be 372.31, which is last week's high. So by currently being up by 4.5% on the week, that's like a big week. That's a big, well, we're supposed to put in 10% per year. So with this move higher, it still looks a lot like 2008. So if we're looking for an opportunity to sell off, we're probably going to find it tomorrow at 8:30 a.m. when we have, why didn't that filter? Tomorrow when we got Payroll Friday coming in at, for tomorrow. Tomorrow at 8:30 a.m. So we're looking for 250,000 in non-farm payroll. Previous number was 315. Also looking for unemployment rate to stay the same. If these numbers come in red, that would be very well received by the market. Right now, bad news is good news. So if we look here to the two separate metrics, we just want to look and see what the trend has been coming into today so that if we get a positive or negative print, we understand what it means. I'm going to remove 2020 just so we can look at the most recent data. And here we note that the number of non-farm payroll jobs is actually already low at 300,000. That is the lowest number we've had going all the way back here to March of this year. So if we do come in at 250, that would be pretty much on track with this number here. And if it comes in red, meaning it is a miss, that would be the lowest level of employment gains we have seen in at least a year. That would be received as being what? Probably bullish, because bad news is good news. So we're watching for a red print tomorrow on the non-farm payroll. That comes in red. Market's probably going to have a nice up day. If we have a look at that's Canada employment change. We don't really care about that. We're looking at the unemployment rate. So for the unemployment rate, what we're going to look at here is we actually want this number to go up. We want this number to go up because it means people are losing their job. So if you look here at the most recent trend, we're moving basically 2020. If we look here, right, well, that last number was not so good for the Fed. Came in actually lower. So now that we're here at about 3.7 and it was forecasted at 3.5, if this next number goes higher or again comes in red, that's going to be received really well by the market, probably going to go higher. So that's really what it comes down to. It's not overly complicated. And if you look at the heat map for today, well, it's largely what has been working so far here to date. Energy up, dollar up, VIX up, 2-year up, 10-year up. That's pretty much a story. Everything else is starting to tread water. If we look at what has happened in the last week or basically the price action from last Friday when we got that big sell to today, what are we noticing? Chips leading tech leading SPY. So if we're ready to go back up, it's like kind of really important we do it now. If we look here across the different assets as well, we note that dollars up, VIX is up, 2-year up, 10-year up. Everything else is like starting to tread water. Trillion dollar companies, some are green, some are red. Tesla only down 1% today, even with the Twitter deal pretty much coming back into play. And it's not really that dramatic of a day. So if we note that we are way through resistance 3, it really comes down to tomorrow. If we look at QQQ, what we're going to notice that we're right here hovering around that negative 30%, and that is found at 279. Where are we settling right here? Roughly 279. So we are also looking for us to hold last week's high at 281.25. If we can't hold that area, it's likely going to act as resistance tomorrow. So the fact that we closed below it, but we're up 4.6% on the week, we're getting some competing signals here. And that's really what it comes down to. Two more things I want to point out just to contrast this right here, which means our 2 days where we're breaking out. Because as a rule of thumb, if the market is going to go higher, We want to see the dollar going down. We want to see the VIX going down. We want to see 2 and 10-year note going down. So what are we noticing instead? Well, we're actually bouncing off of previous resistance. So what was resistance is now becoming support. That is not what we want to see. That doesn't mean they can't go both up. Can't both go up together. But as a rule of thumb, S&P is inversely correlated to these three assets. So we look here at the VIX, and I think I might actually have these ones here on this chart. Let me actually have a quick look here. Maybe it's this one here. VIX 1 day. Here we go. Already have these all drawn. So we're looking at head and shoulder patterns, and it actually closed above the area I was looking at here. So for the dollar, our head and shoulders would be found roughly like this. So we're already above the relative left shoulder at about 112. It's not a perfect pattern. It's really more of a flag because we're bouncing off the previous top. But I'm just showing you that the market is ignoring the signal, which is usually very accurate. So head and shoulders here is found at roughly 30. FIX is already poked over that. 2-year note, if we zoom in nice and close here, it's really more of a flag. But if we're going to find resistance, it should be right here at about 4.25. For the 10-year note, that is right at about 3.8. So we poked above it. We closed above it. It's been powering up just like the S&P. So one of them is going to be wrong. And I'm really not sure because at this point, we are definitely still in a bear market. However, we note that we're right around some key areas. One more chart I want to look at here to make the story pretty easy for us to understand because that's what we like. We like easy. We're going to look here at the 1-hour chart for the E-mini futures. And I think I showed you this one yesterday. So here we're looking at a long-term pattern, which goes back to our August high at 43.20. It's a massive channel identified by these blue lines, which pretty much show that we've been range bound, pretty much holding the pattern, briefly going above and now briefly above again. So this corresponds with the area that we saw on SPY on the 1-day chart. What's different this time and what is similar? Well, what's similar is that we're above the blue line or the short-term price. We're also above the 200 MA, which is the long-term price. We're above both again. No. Yep, that's right. We look at the pattern here now as well, which was formed. We have what? Well, we kind of have an inverse head and shoulders. Over here, we have inverse head and shoulders. We kind of have that same thing. Cup and handle, whatever you want to call it. So this is like looking really similar. And after we got our break of the 200, we pretty much took a pit stop at the 200. Lose the 50, go to the 200, back test the channel, and then we also went lower. So if we now zoom at where we are now, is it looking similar? Absolutely. So our 200 MA is going to curl up overnight, probably meet us here at roughly 37.20. And then we're already below the 50 MA or the blue lines. We got the blue line here, already poking below it. So I'm watching really close. I don't know for sure this is going to play out. If we're going to get a bull move tomorrow, the stage is 100% set. And it's just a matter of whether or not we get follow through or if we don't. If we're going to start going higher, that same 38.50 area is what I'm really watching here. And I think this is a pretty simple story for us to try to get ready for tomorrow. Finally, if we have a look at QQQ or the Qs on the daily chart, we also note that we've done a push-pull. So we've pushed off the 50, claimed the 200, and now we're pushing again off of roughly 285, which goes all the way back here to, what low was that? That's from May. So it goes all the way back here to our red line, which is our May low. And I'm not sure if this W is complete, meaning this pattern is now good enough, or if we're going to keep going higher. So there's a few more things I want to quickly look at. I talked about this on our pre-market stream with our group this morning, and I think what's really important for us to keep in mind is just where we are with the seasonality chart as well. So I'm just going to zoom up here 1 second. We look at our seasonality chart. So what's really important for us to keep in mind as we go into Friday is just what normally happens during this time of the year. Right now, bad data is good data. The bulls need to keep the pressure on, and that's because where we close tomorrow is really going to set the stage for the next week and for really the rest of the month. So as of right now, seasonality tells us that we go up violently into the beginning of October, and then, oh boy, do we go down, we go down, we go down. So if we're going to start going down, it's like pretty much time for us to start doing that. This is pretty much when earnings season is going to kick off as well. And when we have that that national convention for the CCP or the Chinese Communist Party. So for me, the story is very clear. I understand what I need to see going into tomorrow. What I would encourage you to do is to come hang out with us tomorrow for the final hour. My name is Justin. our stream is scheduled for tomorrow. Whether or not the bears are going to get trapped, we'll find out. Come hang out with us for the last hour of trading. And otherwise, click on the video that's going to queue up here in a moment for my weekend thoughts in terms of how we got to where we are, and where we're likely going to go. Otherwise, thank you so much for watching. Happy Thursday, and look forward to seeing you tomorrow. Thanks so much.